All right, so it's gonna be a quick and easy one. Another subject that I've preached about, talked about for many years now, but I've never done a comprehensive video concerning it. And the topic actually came up a couple days ago at a bar, and that is, and I'm going to rephrase it differently than what I have in the past. Right? Is using IRS government debt as an investment. And so what I simply mean by that is your IRS tax refund. Um, when you change your perspective and change your mentality on how you look at finances, it allows you to see things a little differently. And so what I've always told clients, especially young mothers, who know that they're going to receive a tax refund every year for at least the next couple years, I always tell them, do not file your return this year. Don't do it. And it's always kind of a crazy thing when it happens because first of all, they're taken aback because they're like, well, wait a minute, I'm trying to pay you to file my taxes, and you're telling me not to. And yeah, I much rather you not file your taxes because it'll benefit you so much more in the future. When we talk about investing, when we talk about monetary discipline, when we talk about financial literacy, um, all this stuff really comes down to putting off benefits today for a benefit tomorrow. In many cases, that is always the better alternative. Work now, play later, right? The IRS allows you 3 years to file a return. And even though I've discussed this many times with young mothers, this also is something that anyone can do. I mean, personally, I've been doing this since 2012, I think, was when I first started. Yeah, 2012 is when I first started doing this. And it's worked out great for me, and I don't have any children. I don't have any tax credits or anything like that, but it does allow me to invest basically in IRS government debt because at the end of the day, a tax refund is U.S. government debt, one of the safest um, debts in the world, actually. And so again, I want to go back and say this to make sure we're all clear, right? So you do have a requirement to file based on um, based on penalties and regulations. All right. What I mean by that is we all understand that filing taxes is a voluntary act. There is no quote unquote law that says that you have to file taxes. However, if you don't file and you owe taxes, then you will be charged penalty and interest. However, if you don't file and you don't owe, then there is no penalty, there is no interest, and in fact, the government owes you money, and they will actually pay you interest on that money. Okay, so let's go just a little bit deeper here to explain what I mean. So there's only a few situations I'm going to cover. All right. So again, if you are you know a parent with children and you know that you qualify for the child tax credits and earned income credits and all those things, typically you're talking about roughly $3,000 per child, right? Okay. Well, again, if you do not file a return and you know for sure you're due a refund, the IRS is not going to bother you. They're not gonna call you. They're not gonna send you letters. Nothing is going to happen because they know that they owe you money. So they're not going to say anything to you about it. And you have 3 years to actually file that return to claim a refund. And it's specifically 3 years within the return due date, meaning in 2017, taxes were due in 2018. So you have 3 years from April 15th, 2018 to file that return. And also, if you file an extension in 2018 for your 2017 return, then that gives you until October of 2021 to file for that return and get that refund. Okay. Now, that's if you know that you have a refund due. Now, if you're someone like me and you don't have children, you don't have any tax credits or anything like that to look forward to, but maybe you have a W-2 job, right? Then you can simply ensure that your W-2 has enough withholdings so that when you do the simple math with the W-2, it shows that you don't owe any taxes. And you can have that flush, right? Again, you don't have to file. The IRS is not going to bother you because they can clearly see, based on information that they have in their system, that if you did file, you're not going to owe them anything. And so, again, they're not going to bother you. And then you have, like I said, 3 years to file that return. If you are self-employed, then my advice to you is that you do file a return, okay, and then you pay the taxes on that return. What I have done over the years is I have paid, well, let me say this. I have filed a return without any expenses. And I'll tell you exactly what I do. So I do include my IRA and 401k contributions. I do include any sort of education expenses. I do include any health savings account contributions, but that is it. I don't include any other expenses whatsoever. So all my business expenses stay off my return. And of course, if I W-2 myself, if I pay payroll taxes, of course, that's going to go on the return, right? But any other expenses, I don't put on the return. Whatever tax is due, I go ahead and I pay that tax to make sure I'm flush with the IRS. And then 3 years later, I file an amendment and I put all my expenses on the return. And what happens is that generates a refund for me. But the benefit is that the IRS pays interest on that refund. And we're talking about 3 years worth of interest. Okay. And so what you're looking at right now is IRS code. I forget the section. Let me see. There we go. 6621, Title 26. Okay. And it just basically says that the IRS will pay basically 3% plus whatever the federal short-term rate is. That federal short-term rate at this point is negligible, nothing to even discuss or talk about. It's very small. But being that we know we have rising rates, at some point we may get something from the IRS increasing those interest rates, because remember, whatever interest rate they pay you for overpayments, they also charge for underpayments. So if someone owes the IRS, the same interest rate for underpaying, owing the IRS, is the same interest rate they use for overpayments. Okay, and so being that interest rates are rising, it's very possible that we'll see the IRS come out and say, hey, if you owe us money, we're now increasing that interest rate to 4 or 5%, meaning that the interest rate that they pay for overpayments is also going to increase to 4 or 5%, which is great for investors like myself. Also, too, maybe it's important to say, maybe not, that this interest is compounded daily. Okay, so that means every single day, meaning that if it takes the IRS longer to process your amendment for whatever reason, you're getting paid every single day you have to wait. And so that's what happened to me this year. Really happy about it. And so let me show you exactly what it looks like. I filed my 2017 amendment last year in April. I think I got it in right under the deadline. I don't remember if I filed an amendment or not for 2017. So just to be safe, I mailed it out in April, and so You expect, that everything is going to be processed within 4 months. That didn't happen. Come December, I called the IRS and they said, well, your amendment is still being processed. We're trying really hard to get all the amendments processed and out. So, we'll get you paid as quickly as possible. I did receive this, and I still haven't received the refund, by the way, but I did receive this 1099 in the mail just a couple days ago, showing my interest that the IRS has paid me for the year of 2021. This includes all the interest from that 2017 amendment. What's really cool is that, being that I have not received my refund yet, I believe that I still have some interest accruing in 2022. So this will be the first year in 10 years that the IRS has paid me interest on one return for 2 years. So I think I have maybe another 30 days or so of interest in 2022, if not longer, because like I said, I haven't gotten a check yet. So for me as an investor, it's not anything I worry about. Investing, remember, is money that you don't need, right? And so my amended refund was $14.50 and some change, maybe like $14.60 or something. I forget the exact number, but $1,400 is what they owe me. But I received almost $700 in interest on that $1,400. That's a 50% rate of return. Now, of course, I have to wait for that money. Okay, so I did do the math, and so as of right now, if I receive that money by April of 2022, that means I will have waited 4 years on that money, which still gives me a rate of return of 12% a year. Okay, and so we're talking small potatoes when you're talking about a $1,400 amended return. But if you're talking about again, someone who knows they're going to be getting a couple $1,000s every year, I mean, you got to really do the math on this. So let's say your refund is, let's just say $3,000, just to be nice about it, right? And if we give the same rate that I received, we're talking about a $1,400 increase, so $4,000 instead of $3,000. The other thing that's really cool to understand is that there isn't, again, I do this every 3 years. So I sent in my amended 2017, like I said, last year. I'm sending in my amended 2018 this year. But keep in mind, I'm an investor. So if I wanted to, I can send in an amendment for 2018, 2019, and 2020 right now today. Right now today, I can send in an amendment for 18, 19, and 20. And I'm going to get money back on those amendments plus interest. And so, when you look at, all right, so you're going to get, 3,000 for 1 year. You got 3,000 coming another year, 3,000 another year, and then let's just say on average that comes out to 12%. So you're talking about $10,000 in one go, right, for 3 years. And this is what I suggest. Like I said, to parents who have children that know they're going to get these things, is don't do like I do and like amend every 3 years or whatever. No, what I suggest is you don't file at all. So don't file 2021, don't file 2022, don't file 2023. You're going to file all 3 of those returns in 2024, right? And what's going to happen is you're going to get refunds for all 3 years, but then they're going to put interest on all 3 of those returns. And so more than just receiving the extra money, it's also a psychological thing too, because if someone is giving you $3,000, it's very easy to spend that $3,000. But if someone gives you $10, $12, $20,000, well, now you can really start thinking long term. You can really start thinking about buying assets and things that's going to give you some real money versus just blowing $3,000. So here's the other thing that I looked at, just for the purposes of this video, was I went and looked at CD rates, and I really thought they were going to be better than what I found. I mean, this is abysmal. This is ridiculous. So remember, the IRS owing you money is U.S. government debt. It ain't going nowhere. It's safe. It may take time for you to get it, but who cares? They're going to pay you interest the entire time you're waiting, right? Versus putting money into a bank. We're talking about a CD. So we're not talking about a checking account, savings account, because those rates are even less, right? So we're talking about a CD where you put the money in and you can't touch the money, right? You can't touch it, which I never necessarily liked. That's the reason why I have my money in the market, because I can take it out whenever I want to. With the IRS, even though I may have to wait some time for my money, at least it's up to me as to when I file, you know what I mean, to get that money. With a bank CD, you put the money there and you know for a fact, like this one, for 15 months, you can't touch it. Like, for a fact you can't touch it. There's no ifs, ands, or buts about it. And they're only going to give you 1% a year. IRS is paying 3%. All right. I mean, look at these numbers. I mean, 0.8, 0.65. I don't know. Maybe bank CDs in the U.S. are just not going to be around anymore. I mean, the largest from a credit union, because credit unions always offer better rates, 1.25%. But your money is locked up for 2 years, and the minimum deposit is $1,000. That's stupid. 1.2%, minimum deposit $2,500. 3 years your money is locked up. Like I said, you're better off paying the IRS $2,500 and collecting 3% a year than you are at giving Live Oak Bank $2,500. You see where I'm coming from? So again, think about using the IRS as an investment vehicle, right? A lot of people, complain and have problems with the IRS, but they also have other investments that may not be doing as well, right? So how about just putting that money into the IRS? You're flush with the IRS, you don't have any sort of tax issues, and you're making money on top of that. Why not? It makes sense to me, right? And they don't get better. I sat here and clicked next, just to make sure, because I really, it's unbelievable. I mean, these numbers are just crazy. Like, who in their right mind walks into a bank and gets a 0.5% for 2.5 years? $10,000 minimum deposit? Like, that's stupid. I mean, I don't understand. It does not make any sense. And this is in a economy right now where we have rising rates, we have inflation. I mean, these numbers don't even keep up with inflation. So, like, it's pointless that they even have this. So anyway, think about that. Use the IRS as an investment. And there's multiple ways of doing it. Like I said, even if you are just like a W-2 employee, maybe you do have those IRA contributions, those 401k contributions. You can leave those off of your return and just file the W-2. And like I said, have withholding from your job. Make sure that your taxes are covered for those W-2 wages. And then every 3 years, you file an amendment to simply put on your IRA contribution of $5,000-$6,000, which is going to give you at least a $600 amended refund just on the IRA contributions. It's not even considering things like bad debt expense and all that kind of stuff that can ratchet it up even higher. And then you're getting interest on that money. We're really not doing anything more than, I guess, taking an extra step and paying a little bit of money now for more money later, right? So anyway, from me to you, I holla.